So today, guys, we want to talk about the latest craze in the Bitcoin and finance world, which is like the Bitcoin reserve companies. We've all seen this public listed dead zombies company popping up everywhere and announcing that they are going to raise money to accumulate Bitcoin supposedly indefinitely. So today we're going to try to explain how this work and what could be the impact on the Bitcoin ecosystem as a whole. And we have the pleasure to be with Eric, which is the co-founder of Epoch, a venture capitalist firm that invests in Bitcoin startups. And with my mate, Théo, which is the general manager of Bull Bitcoin Europe. So to start with, let's put a little bit of perspective into all of that. Right now, the Bitcoin dominance is almost at an all-time high since 2017. So it seems like every shitcoin narrative faded away. In 2017, we had like the ICO boom. Everyone was talking about the blockchain revolution that would disrupt every industry and blockchain for IoT, tokenized real estate. We even have Dentocoin, a multi-billion market cap project for dentistry. So it all faded away in 2018, 2019 during the bear market. And most of those coins like went to zero in terms of Bitcoin. Then in 2020, we had the DeFi, which was like the recycled ICO era with all the bullshit of yield farming, basically another way to strip people out of their Bitcoin. Then in 2021, we had the NFT and metaverse craze. And all of this pretty much died down in like 2023, 2024. So basically each cycle have these sneaker oil salesmen that are selling magical way to outperform Bitcoin. And now it seems like it's shifted from crypto and it's becoming more like a legacy finance institution that are trying to tackle this stuff. So we can see like penny stocks company adding Bitcoin to their balance sheet using fiat kind of shenanigans to raise debt and accumulate Bitcoin. And they are promising retail investors that their stock will outperform Bitcoin by increasing their treasury per share. So basically they are stripping down Bitcoin from its censorship resistant property to sell a KYC paper coupon that would supposedly use fiat loopholes to outperform Bitcoin. And it all started with MicroStrategy, the Saylor's company in 2020. And now we have like a bunch of company pretty much everywhere in pretty much every market in the world. We have like MetaPlanet that is replicating the same gameplay in Japan. We have like Blockchain Group in France, SmartWeb in UK, 21 Capital in the US, and the list goes on. So the first question I'd like to ask you guys for the audience that may not be very familiar with how the legacy finance system is working. Is it possible to walk us through how this company can take on so much debt to buy Bitcoin?
So the short answer would be there are more monies than idiots in the market currently, and it has been that way for a long time. So it's like a feature of the fiat system, I would say. You just have like an indefinite demand for yield-bearing securities. So in that context, if you are a listed company such as MicroStrategy or MetaPlanet, you can definitely like float paper on the market and it will find a buyer. What is kind of new is the low interest rate at which they are able to do that, which is, I think, more a matter of how they try to finance their Bitcoin purchase. So basically, you have different mechanisms to do that, but I think the most prevalent one, and Eric might correct me if I'm wrong here, is to use convertible notes. So it's a kind of fixed income instrument whereby instead of having the principal repaid at the loan maturity, you will have basically shares of the company issuing the debt. Instead of cash of the cash amount that has been borrowed. And so it is kind of enticing for a lot of financial players because if, for example, you have a fixed income fund, you are forced to invest in fixed income products. And because we have had inflation recently with interest rate rising, so depreciating the value of fixed income securities, because you have a lot of sovereign insolvencies looming on the horizons, and because we have a lot of zombie companies that have taken a lot of debt over the years and that might not be that solvent in the future. Basically, you don't have many good opportunities in the fixed income market. So here enter Michael Saylor that says, okay, you are forced to invest in this fixed income instruments. Then I will issue one that will basically give you the ability to redeem for MicroStrategy shares. And because I will use the proceeds to buy Bitcoin and just hold it on my balance sheet in perpetuity, basically I just created a kind of a kind of roundabout way for you to get Bitcoin exposure, even though your investment mandate should not allow you to do that in the first place. So that would be an explanation for the fact that the investors are like eager to buy this debt at very, very low interest rate, because they are not really caring about the interest rate or the principal repayment. They just want some form of Bitcoin exposure, and that's the only option they have to do that.
Interesting. Do you have anything to add, Eric, to what Théo just said?
There is this opportunity that exists today where Bitcoin is the best performing asset.
I think I will just continue his line of thought. So basically, I think what he was aiming at is that we have like the best performing asset ever in the market currently, and a lot of capital is tied to specific market specific instruments, and they can't invest in that. And so there is a sort of arbitrage opportunity for companies that have access to capital markets to just structure different kind of debt instruments, or to structure their balance sheets in some way that buying either their debt or their stock would allow these investors to get some Bitcoin exposure.
Yeah, sorry. So like that's the point, is that we have an opportunity kind of based around that. And then the question is like, okay, so how long will this last? There's all these different, and this is even broader than just within credit markets, but there's all these different asset classes that exist around the world today. Public stock, public bonds, private stock, private bonds, debt and equity, and alternative assets and real estate, and all these different components within that. And there's particular investors who are all defined by these specific mandates that they have, aka the people who give them money say, we're giving you this money to do this thing with it. And by doing that, there is an opportunity for them to say, okay, well, this thing that I'm forced to invest in, I have, a 10-year time horizon from which I'm deploying, $100 million, let's say. And over that time horizon, I'm forced to invest it within this category, but I would like to invest that in Bitcoin. Well, what if there is a way for me to still do it within this category and through Bitcoin? And that's kind of what we're seeing at a fundamental level happen, is that there's going to be ways where you can get better terms on something like credit, which is happening today, because you're providing an opportunity for people to allocate into Bitcoin that otherwise would not be able to. Now, the market is starting to get flooded with all of these opportunities, and competition is setting in because Saylor, identified kind of an inefficiency with capital raising once he started down this path of the Bitcoin balance sheet. And so the question is, what's the impact on the cost of capital going to be? Because the value you're adding is by, if you can get, a cheaper cost of capital than for any investor who could simply take Bitcoin and then leverage it themselves, and then also has the opportunity cost of their time and energy associated with learning how to do that effectively. If you can effectively, outperform that by doing this at scale through an entity, then that is theoretically where the value is being added. And the same reason that, capital specializes in fund management in the first place. People specializing in this and doing it at scale provides certain advantages. So yeah, I guess that's kind of like, that's the fundamental thesis around a lot of it. And then the question becomes, how much of this extends beyond that? How much of this is just the actual competitive advantage is this company has really good marketing, and they're able to fundraise very effectively. And those are very important advantages during this time that companies are looking for. That's why we see major podcast people and influencers hopping on boards. And that is the result of more of an unsustainable market froth and kind of fluff. And so like I think when we look at it from that perspective, there's kind of this question of like, well, what is sustainable and what is unsustainable? And really, most things are unsustainable on a particular time horizon. So the question is what's the appropriate spectrum for the sustainability of a practice to deem it, to be something either worth investing in or worth the risk? And it is a wide range of different investors that'll look at things like that. If you want to go gamble, there's going to be plenty of opportunities for people to be investing or gambling around companies and speculating on a 3x within a few days. It's going to, return, and you're going to end up losing money on that investment in a pretty short period of time. But there's also going to be, perhaps on a year-long time horizon, a potential investment to be made. And it's probably not, the market opportunity isn't going to sustain much around that. And that's all going to stem from more people coming to the market, more people issuing credit. These lenders now have access to multiple products, and you're expanding across all these asset categories. I think one of the most interesting points I've heard around, this question of like, when does that window of opportunity within the market end, was when I was on a podcast with Adam Back recently, and he was making the point that these credit markets aren't this isn't going to remain static. So while we might have competition filling this demand need within each market, the market itself could ultimately grow as a product of being able to allocate into this market, which is a good point. But the point is we don't know how to measure any of these things. And because we can't really find certainty around a lot of that, it's a highly, highly speculative game to be playing. And that is probably a good place for me to leave it for now.
Do you guys think this new trend's gonna like eat up the fiat market, or is like the bubble is gonna burst and we're gonna see it padded away?
Yeah. So it depends on which time horizon and also which securities we are talking about. Because like currently, like the hottest things, basically the new meta is like find a corporation in a different like jurisdiction. Typically, like you had first like MicroStrategies and MetaPlanet in Japan, and Blockchain Group in France, and I don't know which other ones, but a lot of new ones have popped up, but in different capital markets. And this is basically the same arbitrage idea. Basically, the idea of thinking, okay, so there are also a lot of constraints around in which kind of markets either like retail investors or fund manager can invest. Like if I take France for an example, a lot of people here can only own stocks through like specific type of accounts where they can only buy European or French listed securities. And so there is an opportunity to just replicate Saylor's playbook in this market, because you will have a sort of competitive advantage against him, in the sense that you can basically tap into a different pool of capital. You can try to market that to a French audience, to French funds and stuff like that, because in many instances, they will have some limitation in their ability to invest into strategy directly. The problem is also that when you do that, and a lot of people are flocking to this market, it can create a sort of bubble. And then if you are late to the party, you will pay a fucking huge premium just to buy either like Blockchain Group in my example, but it's the same idea in any market. And so if you are within the circle of the people that like just decided to buy back these companies and to announce the strategy, and you are early to the party, maybe there is like a good opportunity for you to make a quick buck. But the problem is that even if these companies continue to raise capital to buy Bitcoin, you don't really know how to measure the premium you are paying. Also because they kind of obscure the whole financial engineering they are doing with a bit of like phony metrics, a bit as shitcoiners used to do with TVLs and stuff like that, when they try to lure capital into coming to their own ecosystem with the promise that it will outperform Bitcoin. So what I mean here is that like you see this stock pumping, and then you will have some like press release or some statement saying, yeah, we achieve a Bitcoin yield of yada yada, or we have this kind of MNAV. And the problem is that it only means that like a lot of people bought your stock. That's good. But even if you buy more Bitcoin, that doesn't mean that you will be able to sustain the same differential effect in new people coming in. And it could mean that basically you will, as a latecomer to this, you will pay too high a price for basically the NAV of the Bitcoin that will be on balance sheet even in the future. Don't know if that makes sense, but
Yeah, what I'll add, the premium to the NAV that all these are trading on is based on future expectations that the market has of where the price of Bitcoin is going, and then what the access to capital markets of the manager of that Bitcoin treasury company will be. And that comes down to whether or not people want to lend to them at certain rates. So like that's like kind of like the theoretical premium that you're seeing over NAV. And to Theo's point, just as in any market cycle, and as it becomes more competitive, and as more demand circulates around it, and as these narratives spread where everybody's like, oh, this is outperforming Bitcoin, this is outperforming Bitcoin, look, it's the best stock in the market, and it's going to attract a lot of speculation and money towards it. I think there's a lot of ways that you can look at whether or not that's just starting or whether or not that's getting, close to just being a flash in the pan for the market cycle. But regardless of like what your opinion is around that, it's these types of things are predicated upon expectations of the future. And if you're overpaying from NAVs right now, it looks like, on average, it's about 6x market price to book value or being these are trading at. And we've seen a pretty significant expansion within the market around it. So, people are likely overpaying, but the biggest thing about this is that's just kind of looking at it from the returns side. If you look at it, what's your fundamental goal when you're allocating capital? Your fundamental goal is to optimize the amount of return that you're receiving for the amount of risk that you're taking on. And risk is notoriously challenging to quantify. And by owning Bitcoin directly, there's very specific advantages that reduce the risk you're taking on that, one, don't exist within any other asset class. And two, the second you own Bitcoin through a Bitcoin treasury company and get exposure to its economics, you're foregoing and taking on a significant amount of risk. Number one, Bitcoin doesn't have solvency risk. When, I run a fund of private capital, and one of the funniest things to me is when we talk to family offices, they view what we're doing often as less risky because we're investing in a business that can produce cash flow and it's tied to Bitcoin in some sort of way. And because it produces cash flow, they view it as being less risky. When a business can go bankrupt and Bitcoin cannot go bankrupt, what we're doing is much riskier. But because of these mental models that financial people have around the cash flow production of a business, it blinds them to understanding these more challenging to quantify unperceived risks around a business. And I think that that's a lot of that's happening right now, and what's going to continue to happen this cycle is there's going to be a lot more narratives that kind of emerge around, quote unquote profits of these businesses that are being produced. And that's going to attract capital providers because that type of narrative is just so prevalent within traditional markets. But the reality is that Bitcoin's financial insurance and permissionless technology, and to be able to quantify that's not really quantifiable. It's just something that that you need to own in a very significant way. And to forego that to get leverage exposure to something, which you could do yourself if you wanted to take the time to do so, but to forego that to optimize your returns in another company, assume solvency risk, is significantly increasing the amount of risk that you're taking on versus Bitcoin, and proportionally speaking to the amount of returns you're getting, completely fails in comparison to what you should be optimizing for.
Do you guys, this company can be like forced to sell at one point or go bankrupt and trigger like a new bear market? What's your take on that?
Yeah, I'll add to this real quick. So my firm, we put out an annual report on the Bitcoin ecosystem in February this year, and we did a dedicated section called Bitcoin Corporate Finance Strategy to kind of go through all this and get into the weeds and look at, okay, so are these companies going to go bankrupt? First and foremost being MicroStrategy. And, we pulled the credit agreements on the convertible debt, and the probability of MicroStrategy going bankrupt is very, very, very low. But the question is how is this market going to evolve over time? So when we wrote that report, um, within a matter of, I think, about a month from us publishing it, Saylor doubled the capital plan that he currently had. And the leverage that we were considering based on future expectations of the business is more significant than what we put in the report now with them. So who knows where that's going to go over time. But we definitely think about MicroStrategy being kind of like the investment grade of this whole structure of Bitcoin treasuries that are emerging. And the big thing that we identified is we're just like, look, it's pretty easy to say that there's going to be a lot of companies that are going to do this. It's going to spread pretty widely. And eventually a bunch of them are going to take on too much risk and go bankrupt. And it's like, why is that? Well, because they're going to be taking on debt that has more stringent terms than what something like MicroStrategy is doing. And in order to differentiate themselves amongst all of the other Bitcoin treasury companies that'll be out there, they're going to have to do something like say, hey, we're going to have a higher leverage ratio. We're going to have higher returns. People are going to see our Bitcoin treasury company at the top of the price chart. And then our stock's going to run up more and our collateral base for more leverage is going to increase. So there's because of the circularity of that relationship, it's going to create a lot of herd mentality type behavior amongst the managers who are managing these companies. And we'll certainly see kind of a pernicious incentive for people to want to take on more risk. So like that argument's easy. It's like, what do you look at to try to find canary in the coal mine around all this? And the big thing that we started measuring, and once again, this was back in February, and we're kind of updating things now to take another look at it over the next couple of weeks. But like back in February, like, okay, is there degradation of terms on the debt that's happening? And what does that look like? And back then it was effectively like the most comparable issuances we could have looked at was Marathon and what was the other one, Adam? It was Marathon and Riot issuances. And their convertible premiums were not as good as Saylor's. One of them was paying an interest rate. And we did see a degree of term degradation on the debt being issued by those public companies in a pretty significant way. So the question is the canary in the coal mine comes down to when these terms start to get worse and worse. And there's so much information asymmetry around that because very few people in this market are going to go start reading credit agreements. What they're going to do is they're going to read some sort of leverage ratio. They're going to look at debt to equity, and they're going to look at a bunch of percentages and say these companies are fine. The reality with credit investing is that there's a lot of different terms that can impact things, and to actually pull the agreements and read into it, we're going to probably see some sort of term that's deep into these credit agreements that creates a large risk that grows and grows over time that everybody takes on, but they keep the headline terms to look, pretty good in the market. So like that's kind of what I would start looking at to say, here are the ones going bankrupt and when. But to get the timing right on all this, to my point at the beginning, is just there's so many assumptions that go into it. It would be too hard to forecast.
Okay, interesting. And the question I wanted to ask also is, there was like lots of people talking about that Saylor refusing to share his proof of reserve. Would it be possible that these guys aren't really buying one-to-one real Bitcoin? And what would happen if they have like custody issues like hacks or something like that? Because we know that with custodian on the long enough time frame, we know that it's pretty certain that at least one of them is gonna go under,
So it's difficult to quantify, but it's basically a specter. So when Saylor was asked this question, basically his answer was in two parts. The first part, which is kind of bullshit, is like, oh, it's really a security hole for us to do that because we will have to reveal our addresses. So first, you can theoretically, maybe not practically, but it will come soon, do that without having to reveal the specific addresses on which you hold the Bitcoin, basically. And the second thing is that the security downside that you would have from that is really minor if you do that properly. So I'm not all too convinced by that. And the second part of his answer, which is more interesting even, is, oh, you guys, I'm caricaturing stuff here, but oh, you guys are crypto anarchists. You should know that in the grown-up world, we have check and balance, we have auditors, we have like big fours, we have stuff like that, and that's how the world works. It's a world of laws and contracts, and so you should trust these processes when they say that we indeed have the Bitcoin we pretend to have. And the thing is that it's a specter, right? Is right in the sense that some folks are a bit too distrusting of these things, but it's not 100% guarantee. It's not mass. It's not a cryptographic signature, so it's basically an uncertainty. I cannot assign a risk of a strategy not owning the Bitcoin, of Coinbase not really buying the coins when they want to execute a buy. However, if you have a lot of concentration of reserves at Coinbase custody, which is the case now that we have something like 8 or 9 ETFs that use them as custodian and a lot of different entities, you basically grow a honeypot first for hackers and also for them to start thinking, oh, but if we control so much of the supply, like how people would find out if we want basically to say to them that, we have your Bitcoin in custody, we bought them for you, just trust us. And that's a story that has been told a lot of times by folks in this space about basically how we end up with a fractional reserve banking system. Of course, it's way harder to end up in that situation with Bitcoin because bank runs are way easier to trigger, but it's a risk nonetheless. It's just less of a risk than when you have a reserve asset such as gold. But it's kind of going back to Eric's argument. It's one of the many risks that you take when you use this kind of vehicle to get Bitcoin exposure that is really difficult to price, and that, to my opinion, is really not adequately priced into the market, because the excess in returns that you would get by being long MicroStrategy instead of having Bitcoin in self-custody is, in my opinion, really not compensating this kind of risks, especially on a long enough time frame.
Yeah, I completely agree. And so then it comes down to that type of a question, and I think that, like, I assume greater risk. I think that some of the benefits and some of the benefits that I get from owning Bitcoin doesn't mean that I need to have all of my wealth in Bitcoin to achieve those benefits. I just need a material proportion of my wealth to exist to achieve those benefits of its permissionless nature, having that insurance against the financial system, all these things. So it's not that I don't think if people want to, go pursue more risk, even if it's not rational on a risk adjusted basis, it makes sense to me why we're going to have some degree of allocation. It makes sense to me how this type of a model will persist for a reasonably long period of time for a minority of Bitcoin treasury companies that exist today. But for now, I think the simple thing here is that it's going to get more blown up. I'm waiting for more narratives to start emerging. That in these narratives, they're all going to be narratives that show, how it is some sort of sustainable practice and ways to show. Like, I think you could find a lot of parallels with this. Like right now, to the arguments that we've made so far, I think what's different from it in a lot of the shitcoins is that a lot of the shitcoins were based very heavily on just future things that didn't exist. Whereas with Bitcoin treasury companies, like, there is an arbitrage, or arbitrage isn't the right word, but there's an inefficiency that exists within markets today that they are capturing. And that is a real thing. But I think there's going to be what, gun to my head, I expect to start emerging is that they're all going to have to differentiate, right? So they're going to differentiate on the financial side of what they're doing, and then they're going to try to differentiate on the operating side of what they're doing. And on the financial side, we, talked about that earlier. They're either going to take on more risk, they're going to find some sort of new type of, credit to structure things around, or some new type of mezzanine debt, or whatever it is. It's going to get more complex around that, and there's going to be a lot more errors made when that complexity emerges. But there's going to be differentiated on the financial side and the capital structure side. And then there's going to be the operating model side. And they say, okay, well, what if we actually have a business? And then if we actually have a business, how do we find synergies between the business and having a lot of Bitcoin? And I think that there actually will be real opportunities there. Like, one thing for our fund that we look at is like, okay, Bitcoin treasury companies can actually be liquidity providers to things. And there's probably going to be some sort of, benefit to having those involved in what we're doing. And there could be a reason for us to say, like, okay, if one of our portfolio companies were to have some sort of partnership or association with one, that would be a good thing. So, like, that, I think, is how it'll start. And then I think we'll get to a point where there's going to be a ton of bullshit narratives about synergies and crazy future expectations, like metaverse level type stuff. And that's all going to be emerging around these operating models. And that'll be, I think, that's kind of the path that I see of like the speculative cycle. I guess that's probably another canary in the coal mine I'd look at, is like, once people start getting really crazy and pie in the sky about how having a Bitcoin treasury company and having an operating model has some like weird future thing associated with it, that's when I think we might be getting a lot closer to a contraction in the cycle. The biggest thing, though, I think, is the second we see any sort of collapse in the equity in a really material way around all these, like if you follow the index over time, and that were to have, a 15-20% contraction across all of them within, say, 5 to 6 months, and there are enough companies within that index that have stringent enough credit terms to have some sort of call on the Bitcoin on their balance sheet, that's when it'll create more of a vicious cycle around the collapse of the thing as a whole. But I'll stop there.
But just to bounce back on that, I think it's a really interesting framing. And if I were to elify this, is Wall Street has an unparalleled ability to take just a good idea and leverage it through stupid financial engineering to the point where people lose touch of reality and start to peddle different narrative, ever more bullish, and to the point that the type of risk that they will be selling is absolutely not priced in. We saw that with many of the blast bubbles over the ever. But the most recent one, if you take, for example, the mortgage-backed securities complex starting from the 80s until the way it blew up in the great financial crisis, it was basically the same overall structure that Eric is describing. Like, at first, a decent idea that might be sustainable in the long run if you keep a conservative stance, but as the market becomes ever more competitive, then you have to take on more risk, and then because you basically have an incentive to not really disclose the risk properly, or even not really assess it properly, because you are too busy trying to make more money than the guy beside you, you get this kind of overeating and craze situation where nobody is really understanding what they are doing. And at some point, because all of that is structured by different type of debt instruments that will suffer, that will create a form of margin call at some point when all the positive feedback loop inverts. You can have a cascading effect that could create dire consequences for those holdings, either those security instruments, but also for those that need to the price of Bitcoin to appreciate in a somewhat short time horizon.
Interesting. Now that we understand a bit more what's happening in the legacy system with all of that. I just want to take a little bit of perspective and to think about what would be the impact of all of this on Bitcoin. I feel like with like the ETF, all these stocks like selling fake Bitcoin to people, are we not repeating the same mistake we made with gold? Meaning that fiat currencies started as a gold bar in a vault, and you will have a paper that say you have like 1 grams or 10 grams of gold. And don't you think that if people get so used to trade paper Bitcoin, on a long enough time frame, we know that they will do like reserve banking on it, you know? Are we going to break the will if we're compromising self-custody and if our people are using this instrument to get price exposition to Bitcoin? What's your take on that?
So there's a lot that I have to say around this, but the core of all of this, I think the most important thing to answer your question, the question is, is there enough when you say people get used to operating on like a paper Bitcoin type of standard, it's will these modes of use of Bitcoin become significant enough to where there's a very significant path dependency that emerges in the market that people have a hard time breaking out of in the future. Like that's kind of the risk that we would see. And that comes from, very significant global adoption emerging around all of this. So I think the number one most important thing is that having a very low marginal cost to participate in self-custodial Bitcoin is going to be the number one factor around that. And all that really means is the easier it is to use self-custodial Bitcoin, the more automated some systems are, the more educated people are on how to do these things, then the better it's going to be for alternative forms of adoption, as well as the benefits purported by being able to use self-custody Bitcoin. A lot of that will come from education. I don't anticipate that we're going to be able to educate a vast majority of the market around that. I think so many people really just do not care to educate themselves on things that if we're talking big picture globally, but I do think a large enough proportion of the market can be educated on it to the point where they have enough people that follow them into doing the same thing. And that's kind of our goal here, is to do that as in as significant a way as possible. So there's like the education side of all of it, and then is there going to be more benefits? And that's the permissionless side. If I have self-custodial Bitcoin, all the permissionless benefits of owning Bitcoin yourself, of course, and then, am I going to be able to do more things with it? And so much of that, I think, comes down to the stage of adoption that Bitcoin is in. I think there's going to be a point where a lot of, centralizing forces are going to be more beneficial while Bitcoin is consuming the store of value market, because the incentive to not hold it with a custodian is so much less. The second Bitcoin becomes more of a medium of exchange that's being used at scale globally, that's when the incentive to self-custody it becomes far greater. So I think that we're going to see cycles around this, because the incentives are going to be adjusting over time for what the average consumer is going to want to do with Bitcoin. And for now, as long as people just want to hold Bitcoin and they're trying to optimize around that, that's when we see things like Bitcoin treasury strategies become more of an appealing version of that to them. So I think that like that's one part of it. The next kind of layer, so it's like we're gonna have these parallel systems, I guess, to summarize. We're gonna have parallel systems of this, self-custodial peer-to-peer, and that has a very long tail that's going to go into its adoption. And there's a lot of people working very hard to create the on-ramps, to create user experiences that make this easier for people, to educate so that people can understand it. I mean, to put that in context of how long some of this is going to take, think about when the internet emerged and personal computing emerged. It took, over a decade, and now personal computing is, was a significant part of our education growing up. But today is, deeply embedded within our education systems, where kids are very fluent on iPads at a very young age. But even like when I was growing up, we had computer class, and that's something that will eventually start to happen, where personal finance is going to have a major Bitcoin component of the education, and that's going to be a part of our education systems at a certain point. That takes a very long time. That's going to create a very long tail of adoption before people are ultimately implementing these types of practices. So while that's happening, this parallel system is also going to be having a more centralized system built out. And one of the things that I've written a good amount about is, even though there's going to be more trust trade-offs within this other parallel, more centralized system, the ability to use cryptography and to put it into automated software is actually going to create really novel ways for us to vastly improve the trust trade-offs of centralizing forces within like a reserve type system. And I've written pretty extensively around how that could potentially work in the future at more of a theoretical level. But so that's something that my point around a lot of that is, and I could talk for a lot about that, but like my point about all of that is I'm not as concerned if people were all just moving into the banking system, or something, akin to that with Bitcoin. That would be a major concern for me. But I think the reality is that people are going to have options to move into more centralized systems that have at least more optimal trust trade-offs if you're going to assume a centralized system. And because of that, we might have a much more optimal type, centralized organization or a centralized system that exists. And that's something that I'm more comfortable with than the alternative. But I'll leave it there.
Maybe to put a bit of meat on that, because I suppose that it might seem a bit abstract to a lot of people in the audience. If you think about stuff like Eric was mentioning liquidity providers before, but if you want to run an ARC service provider, you would need to find a lot of Bitcoin somewhere. And same for lending markets, same for derivatives markets, same for stuff like that. And with cryptography, you can structure this agreement to some extent in a situation where you have almost no counterparty risk. And then it makes it more alluring to you to have Bitcoin in self-custody, because you can basically transfer a lot of the burden, the technical burdens, the technicalities of owning UTXOs to some type of construct. And you can also have the benefit of, in some sense, of getting some maybe really low but return on the Bitcoin you hold. But you cannot do that if you do that through a custodian. But it's dynamic, and it also is a matter of how fast this kind of technologies are maturing, because at the moment you have very little opportunity to do that, and self-custody remain basically in phase one. Like even if you use like backup solutions such as like recoverable that we introduced in Prague or stuff like that, first it's kind of new, and also it's still difficult to many people, especially because they will find it risky only in the sense that they cannot assess risk directly. So it will need to go a bit mainstream before they think of that as less risky, and so they consider that more favorably compared to basically leaving their coin on an exchange or holding an ETF or stuff like that.
But don't you think that these people that are trying to sell Bitcoin stonks are trying to shift the culture a little? We had Saylor that was saying you shouldn't spend your Bitcoin, but the white paper of Bitcoin is all about spending and using it as money. I mean, when I come in Bitcoin some years ago, the narrative was all about not your keys, not your coins. And now I feel like they try to strip down Bitcoin from its monetary property and say, oh, it's only a store of value asset. And the best way to use it is to put it in a custodian to have like fiat credit. What do you think of this technique to try to hijack the narrative in their direction? Is it a threat?
So my perspective on this is that the Bitcoin's really big now. Bitcoin is one of the most valuable assets in the world at this point. It has the largest financial institution in the world that's promoting it to, all these different asset managers around the world. These financial products built around it are like the most successful in history. I mean, it's just historic what this has happened, and what's that doing? I think, as we've said from the beginning, that Bitcoin's growing, and I don't think it's as much that there's a ton of people who are necessarily trying to change the culture of Bitcoin, as much as there are people from different cultures creating their own around Bitcoin, which it's always been, but just at more of a minor scale. And some of these people are very influential and powerful people at this point. So you can definitely, to your point, argue that that is changing the culture of Bitcoin. But I think the more the higher level way of viewing this is really just Bitcoin's culture is growing, and I think it's important for everybody to adhere to their values and the cultures that they believe around this. But I honestly don't expect that it's going to sustain en masse for that long the way that it has. I think it's really going to change over the next few years as we have more people from other parts of the world, from other areas of life, that come in and find something new or some sort of new narrative adoption that gets people introduced to it. And the corporate suits are going to be a very large part of this, and they're going to have loud voices, and they're going to do what they're going to do. And I think memes at the end of the day are still more powerful, and people aren't stupid, and we're going to be just fine from all of it. So it's just people having their opinions on different things, and using it for the way that they use it based on how they live their life, which is it's a vague way of saying that as long as Bitcoin works, I'm always going to be fine with it. And I think the truth is always going to come out, and we have enough marketing platforms to where we can make the case for all of that at this point, and that's not being choked off. So we'll be okay.
So yeah, another way to see this kind of change of culture you are describing is just that taking Saylor as an example, but I'm not like trying to pick up on him. It's just like the guy has something to sell, and it's antagonistic to self-custody, basically. So it's all too normal that he's trying to frame stuff that way. That being said, it's not I agree with Eric. It's not necessarily how it will remain in the long run, especially for the reasons he mentioned before. And also, something maybe to keep in mind is that if it becomes too large a culture, at some point Bitcoin stopped working, because even the side of Bitcoin that these guys really like, which is basically the store value NGU type of properties that it has, it only works insofar that there is real price discovery predicated on the fact that there is a hard cap. And at the end of the day, for that to work, you need to basically run a node and be able to verify against double spending. There is this phrase in the white paper that is basically the only way to prevent against double spending is for all network participants to be aware of all transactions. So if at some point, like you have the vast majority of people that have exposure to Bitcoin in the world, just not running a node, not having self-custody, not being able to interact directly with the network, you will be in a situation where a lot of the custodian or the centralizing forces are incentivized to just like fake price in some way or another, and then it destroys the NGU property that they love so much, and then it come back falling, and then they learn the hard way why the cypherpunk crypto anarchist UTXO dealers that we are always stressed the importance of self-custody, of running a node and stuff like that. And then you basically go back the opposite direction in terms of culture change. So again, it's dynamic, and maybe you have to go through this phase for a large swathe of the new Bitcoiners, in quotes, to learn about this stuff. Basically, they need to burn their finger to understand how important it is.
I have another question. Like, we all remember Mt. Gox, FTX, and all these exchanges being hacked. Do you think like the Coinbase and all the big custodian that these ETF and stock company use crack the code and finally find a way to not being hacked? Or you think that on a long enough time frame, it's sure that it will be major hack again?
Yeah, I don't know about that. I think like the security hole is always between the chair and the computer, so it's not really a matter of like how sophisticated they became. But honestly, I'm way more concerned about Bitcoin, about Coinbase selling 42 million Bitcoins than being hacked.
Oh, you mean they could like increase the supply, right?
Yeah. That's what I was saying before. Is that no? It's not that they could increase the supply. It's just that at the end of the day, if you cannot verify the transaction on chain, you cannot verify the hard cap. So the problem is more around like centralization of custody and exchange to be able to ensure that there is not like too much paper Bitcoin sold onto the market, and also that if there is some, at some point the issuer of the paper Bitcoin will get wrecked, and it will go back to normal, like the leverage will flush. But regarding hacks, I absolutely have no idea how they work in terms of security practices. I assume they're good, but yeah, at the end of the day, no custodian is perfect. So it could always happen. So you could say that on a long enough time frame, like they will get hacked, but it's also like a kind of like a weird argument, because on a long enough time frame, like everything can happen. Like, you know what I mean? I'm not sure that is the biggest risk. I'm more concerned about like laws, seizures, and paper Bitcoin than hacks in the common sense of the world.
You talk about seizure. Do you think it's possible that we get like a 6102, like they did with gold in the 1930? The government basically seizing the gold from people. Do you think it could be possible they would do that and like bankrupt this company?
So 6102, the idea was to basically ban self-custody of gold because gold was money, and the plan of FDR was to devalue in order to boost the economy, in quote. So you could not have a replay of this because first, Bitcoin is not money, and also because you don't have a price of Bitcoin. There are prices of Bitcoin everywhere. You can have an order book. So it would be quite impossible to try to fix the price of Bitcoin as it has been done with gold for basically 40 years until we got out of the gold window in 61, but in 71. But you can always imagine that at some point, some government agencies try to infiltrate custodians or try to just through legal means to seize them, and then we will see how they react. But I think it's really difficult to do. But we should not underestimate the stupidity of political leaders and lawmakers. So maybe at some point they will try. I'm not sure it will work out, but they could definitely try, especially in the context of a public insolvency or something like that, a government insolvency or something like that.
I mean, all of that to me is very worrying. I feel so much safer owning my UTXO. Francis famously say that at Bull Bitcoin we are UTXO dealers. I like this wording. It's important to be very, very strong on self-custody and never like start to tell that buying stocks or ETF are adopting Bitcoin. You know, there is no such a way of adopting Bitcoin by skipping self-custody. If you want to use Bitcoin, you need to go the hard way. You need to learn how to secure your Bitcoin. You need to learn how to have a seed plates, a passphrase, all of that. And at the end of the day, it's not technically difficult. It's just that you need to understand that you have to take the responsibility. And I feel like most people want to skip the responsibility. And that's why they go through this type of investment. But that's just my take.
Yeah, no, also, I think it depends on the situation. Like you learn the importance of self-custody sometimes the hard way. If you go to people that are living in financially repressed countries, it's way easier for them to understand why, it's kind of, a very important property of Bitcoin, the fact that you can just, own it as, knowing an information. And also, I liked what Eric said before. As Bitcoin becomes more of a medium of exchange, it incentivizes people more to learn about self-custody and how to use it directly. I think that's something that we witness firsthand at Bull Bitcoin, since we are paid in Bitcoin, and that at least you and me, we often use it as our preferred mean of payment, even if it entails oftentimes some kind of intermediary converting into fiat for us to be able to pay our counterparties. But the more you use it, the more you understand that, yeah, it's way better user experience than your credit cards and your bank account or even fintech apps or stuff like that. And the more you will have utility in using Bitcoin as a mean of payment, the easier it will be to educate people on that. Because if you think of like the average Bitcoin holder that is just here for the store value narrative, if he lives in somehow like well-run country with the rule of law and stuff like that, he never experienced a government seizure, hyperinflation, or financial repression in his life. It's almost impossible to convince him of the importance of self-custodying unless he's eager to learn about like 100 years of financial history and history at large. So in this different context, so either through like sort different flavors of financial repression, or just with the personal experience of using Bitcoin ever more on your daily life, it becomes way more interesting for you and way easier to want to learn and understand why internet magic money is not just a store value.
Yeah, that's a good point. I mean, when people say that Bitcoin will set you free, they're not only talking about NGU number goes up and price appreciation, you know. Bitcoin will set you free because nobody can shut you down, and it's not like a social media. Nobody can take you down neither. And eventually that's what's gonna make you free, because you're not fearing all of these things. They don't have like any ways of pressure on you, you know.
Yeah. One of my favorite things is when you get somebody for the first time set up on a Bitcoin wallet and they're just like, that's it. Because they're expecting to go through some sort of KYC process for every financial app they ever sign up for. And they're just like, that's it. And yeah, it's cool. I agree that I think like the fundamental challenge with UX on medium exchange for Bitcoin is that it requires a network effect. Like a lot more people, I would spend more of my Bitcoin if I knew I was getting paid more in Bitcoin from other people. And like that's kind of one of the bootstrapping challenges around a lot of it, because I mean the spending, as long as you're replacing everything that you're spending pretty consistently over flows, then it shouldn't be an issue to spend day to day from like an economic standpoint. It should kind of level out over time.
I mean, we often say that no one is accepting Bitcoin, and that's a pain in the ass, and that's the reason we don't spend our Bitcoin. But I feel like we need, as a culture in the Bitcoin space, try to push spending, you know, because at the end of the day, when like a local business accept Bitcoin, it's going to be flooded with clients. It's going to be more person that's going to accept it. And when you get Bitcoin cash flow, it gets it way easier to spend it. And people say, oh no, I'm not going to spend my Bitcoin because the price is going to go up in value. But every fiat expenses you do have an opportunity cost in Bitcoin, meaning that if you discover Bitcoin in 2018, when you were like buying cocktails in a bar in 2019, it's money you used not to buy Bitcoin, right? So the opportunity cost is the same. Either you're spending Bitcoin or either you're spending fiat, especially if you are if you have majority of your net worth in Bitcoin, you can still like spend and replace, you know what I mean? So I feel as a community, we need to push a lot the spending habits, because at the end of the day, that's what gonna make flourish a Bitcoin P2P economy. And when you can get cash flow in Bitcoin, you're like Neo in the Matrix, you know, you're pretty much above the law and you can do whatever you want. No one can shut you down. And it's like the ultimate freedom, I guess. Any of you have like a final thought before we wrap up?
Yeah. So like, look, the big takeaway to kind of summarize all of this is that, you know, the idea of a business buying Bitcoin and taking on debt to increase the returns is fine. We kind of have a free market emerging around all of that. The risk to reward being taken on by people who are investing in things like that pales in comparison to the, you know, difference in risk of owning self-custodial Bitcoin. And a lot of these things are challenging to quantify, which is why they're not going to get into the mainstream. And people are typically too lazy to think through and understand these things. But nonetheless, the risk-adjusted benefit of Bitcoin is something that just can't be beat by anything. And this market's going to grow, and there's going to be a long tail of people who end up going bankrupt from pursuing these types of strategies and taking on too much leverage at a certain point. And the narrative is going to continue to evolve from financial engineering to actually having an operating model, to that operating model having some crazy futuristic visions and you know, metaverse type narratives emerging around it. And it'll get crazy. Nobody really knows how long it's going to last. There's legitimate things backing the reason that they can get a lower cost of capital on the credit they're using to expand. That's not going to last for forever. Yeah, so stay safe out there and make sure that at a minimum, you're putting the majority of it into Bitcoin. And if you're trying to pursue more risk around this stuff, you'll honestly probably have more fun trying to do the strategy yourself than giving it to a company.
Barefoot, do you hear us?
Yeah, I hear you.
Good, man. Do you have any question or things going in Mexico?
I guess I just wanted to say, if you wanted to, you could definitely spend in Bitcoin. It's not difficult. And another thing is, when you have your wealth in Bitcoin, then you're not as inclined to spend it. So you're gonna be more careful where you allocate your time and energy, where you want to spend your Bitcoin in. And usually that ties down to 3 or 4 merchants, you know, like the meat guy, where you get your vegetables and your fruits, your raw milk, whatever it is that you think is important for your life. You're gonna narrow down the merchants that you give your Bitcoin to. And so here in Mexico, I can transfer it to any bank account with Pool Bitcoin. So I could save the 5 merchants that I buy stuff from. I could save them onto the account, and then every time I need to pay them, I just send them a transfer with my Bitcoin and they receive it in pesos. So it's not like they even have to accept Bitcoin if they don't want to. But I don't know, slowly they start to ask questions. And then, I don't know, I went to Bitcoin Jungle in Uita, and everyone's accepting Bitcoin. And I think they realize how easy it is. They open up new markets, and eventually everybody just wants to accept Bitcoin.
Yeah, that's for sure. I mean, we need to shift the mindset around that. Spending Bitcoin is cool. It's not because you're spending Bitcoin that you're gonna lose money, because at the end of the day, you're spending fiat no matter what. To finish on that, I don't think there is shortcuts. If you guys are in Bitcoin to become a freer person, you need to go through the hurdle of self-custody, of taking responsibility, the same way you should do with like your health, with your safety and all of that. So just as a reminder, we have Barefoot on the talk. He's in charge of Bull Bitcoin in Mexico. We are now fully available in Mexico. So you can basically use Bull Bitcoin to send fiat money in Mexico with Bitcoin. You can also stack Bitcoin with a Mexican bank account. If you want to buy a house in Mexico, you can buy it with Bitcoin without the need of a bank account. We're also available in Canada, in all the Eurozones, and there is lots of more Latin American country we're exploring right now. So there are going to be like a lot of news coming from Bull Bitcoin in the next few weeks or months. Stay tuned and we will let you know. Do you have any final thought, Théo?
No, I think Eric pretty summed it up. Yeah, I'm eager to see how it will pan out. I agree with most of his insights and forecasts. And yeah, I will definitely be interested into seeing how this develop, because to me, I think this will continue at least for months, with new Bitcoin treasury companies popping right and left in different markets. And yeah, at some point, it could be like the blow off top narrative of this cycle, and then what plunges into a bear market as they become forced sellers through margin calls. And yeah, I think that could definitely pan out. Difficult to have a timing there, but that's an interesting way to see this phenomenon.
Okay. Thanks a lot, guys, for being here today, listening to us. I'll be posting this conversation in YouTube within the next few days. Make sure to follow Théo and Eric and the Bull Bitcoin accounts, and we'll make another space another day, maybe, if there is a news that we want to cover. So have a good one, guys. Take care.